Let's have a look at an example of using combination of trendline and the pivot levels to do the trading. You should have pivot levels on your chart all the time, and there's a setting from your trading platform. And we can see there's a PP and the two support levels here. The market is not going anywhere, it's consolidating. But we have a low, we have a lower low, another lower low. And at the top we have a high and a lower high. So we can define the range. We have two trend lines here. Whenever the market goes between two trend lines, you're expecting it's breaking out to either the upside or downside. And in this case, you can see the market breaks to the downside with two consecutive bear bars. These two bear bars are very strong because they're bigger than any of the previous bars, and also they have big tails at the top, which is resistance. So this is the breakout to the downside. These two bear bars breaks the bottom trend line, but at the same time, it's also breaking the PP level here. So by using the combination of a trend line and pivot table, and the market breaks both at the same time, this is a confirmation of the downside pressure. So higher probability the market will go down. You may ask, if there's only trend line and then it breaks, should we trade it? Yes. If there's only pivot levels here and then it breaks it, should we trade it? Yes. But what is the difference between the trend line and the pivot levels? Basically, trend line is more robust. It gives you a high probability of the trading opportunities, and then a little bit lower opportunities for pivot levels. Therefore, this trendline breakout is the major factor for the breakout setup, and then the pivot levels can serve as a confirmation. For the breakout, we wait for the pullback and then wait for the signal bar. So in this case, you can see this small bull bar serves as the pullback, even though it is very small in the body. And then the next bar, even though it is a bear bar, but it is not a very good signal bar because the body accounts less than 60% of the candlestick, and then it's leaning towards the upside. And at the same time, the tail at the bottom is very big, which means the support. So do not trade when you see this bear bar. Next, the market goes up with two consecutive bull bars and then followed by a bear bar. Basically, you can see here, this region, we can say that this market is going up to test bottom trend line, but at the same time, it's also testing the PP level. This is also a way to use the combination of trend line and pivot table to see whether the pullback is good enough so the market will go down. This bear bar can serve as a signal bar because the body accounts over 60% of the candlestick is leaning towards the downside. So when this bar finishes, you need to put your entry at the bottom of the candlestick. This is what happened afterwards. You can see the market goes down. Let's take a look at the legs. This breakout is the first leg, and then we have a pullback. And then the market goes down. This bar is a bear bar with a big tail at the top. This bar will serve as a small pullback even though it is a bear bar. So to me, it's the second leg here, a small pullback, and then the third leg. And then the rest of the market here, do not count them into the breakout downside because you're not gonna capture this and then just forget about it. It's not in the pattern anymore. How do we take the profit? There are quite a few ways. The first way is to use the pivot levels here. We have the levels drawn here, so when you enter here, a very good place to take profit is the S1, and then another is the S2. So you can see the market, why it pulls back here, because someone is taking profit. Why it pulls back here and then pulls back a lot, because a lot of people take profit, and then this is already S2. So the probability for the market to go down even further is very small. So that's why you can use S1 and S2 to take the profit. Another way to take the profit is to use the measured move. It's very important for you to understand the measured move technique. We measure from the top of the first leg here and then to the bottom of the pullback. We can see this is the first leg, or this is the distance that the market is expecting to go for the second and the third leg. And then we measure again from the top of the second leg and then measure down the same distance as the first distance here. You can see this is a very good level for you to take the profit. The same thing, This is the third leg top, and then we can measure down. This is another level you can take the profit. You may ask, which method is better? There's no better way. It depends on your experience. So to me, for the second leg here, we have the S1, and we also have this measure move here. Normally, I would be a little bit conservative, so I would take the S1 because it's gonna reach it quicker. And then the same logic, so we have the measure move level here and then S2 here, so I will choose the measure move here because it reaches quicker.